Shares in Australian-listed Arcadian Lithium jumping today after reports suggested that the mining major Rio Tinto has made an approach to buy the company. Lithium, of course, a major component in electric vehicle batteries. And our guest says the deal could be a win for both sides. We're joined by Varun Sikka, senior analyst at AlphaValue. Thanks very much for coming on the show.
Thanks, Andrew.
It certainly looks as though Rio is determined to get into lithium one way or another. They tried to buy a stake in SQM. They've been trying to build a mine in Serbia. They've had local opposition, and this is their latest attempt.
Yes. So as far as lithium is concerned, this has been one of the key diversity element that Rio Tinto has been wanting to chase for almost 5 to 6 years now. Mm-hmm. So as you rightly pointed out, their inability to buy a minority stake in SQM and the fact that developing the new mine in Serbia, which was Jadar project, that had been meeting political backlash because of protests locally. And then eventually they managed to develop a lithium deposit in Argentina by the name of Rincon, which is expected to kickstart operation by the end of this year. So that eventually is a long story as far as Rio is concerned. And with the Arcadium deal being unveiled today, it is very clear that as far as the diversity initiatives at Rio are concerned, the firm is clearly evaluating lithium as one of its long-term bets.
We've seen so much M&A in gold and in copper. Should investors be worried that Rio Tinto is just trying to jump on a bandwagon here?
I think we would have a rather contrarian view on that because typically mining M&A happen in market up cycles, which is what we saw precisely when BHP unveiled its offer for Anglo-American earlier this year. Copper prices were kind of going through an upcycle. And now what Rio is trying to do is that they are trying to get their hands on an asset that is an asset class that is struggling as such. And they're kind of trying to get in at perhaps close to the bottom of the cycle. It's tough to say whether a bottom has been reached or not. But from a tactical standpoint and a strategic standpoint, I think it's a very smart move as far as what Rio has decided to do right now.
Do you think, so Arcadium up about 34%, do you think, Rio Tinto has deep pockets. Would investors be wise to hold out for a richer price from Rio?
We believe it could be a win-win for both the firms, primarily because if you look at the share price reaction that Arcadian witnessed earlier today, clearly investors are happy that Rio coming on board will be a big benefit for them, more so from a cash flow standpoint. Because as you rightly said, Rio is a deep-pocketed firm, and Arcadian's current market cap is just about 3 to 4% of Rio's current market cap. So it doesn't really make much of a difference as far as Rio is concerned. And see, the thing is that Arcadian, while lithium prices are going down, it isn't a struggling firm. In margin terms, its margins are pretty healthy. Balance sheet-wise, leverage is very much under control. So it's not that it's a firm that's battling for survival. They're pretty much a healthy firm that is facing difficulties in difficult lithium markets. So in that sense, we believe that it's a win-win as far as both Rio and Arcadian shareholders are concerned.
Arcadium has quite the portfolio. They're in China, Argentina, and apparently they've got operations in Canada as well.
Yeah, so the thing is that if you look at Arcadian's asset mix, the bulk of their upstream assets are concentrated in Canada and Argentina, while if we kind of go downstream, their assets are in the US, in UK, as well as in China. But I think the bulk of the value typically lies in the upstream assets, which is the mining assets as such.
Right. Yeah, although we do often hear a lot of the value ultimately will be in the processing of this stuff.
That's true. But the reason why I mentioned that the upstream assets become a game changer because if we see the geopolitical landscape in today's times, we believe that ownership of the upstream assets is what is driving a lot of governments to kind of enforce protectionist measures, and as a consequence, that could be a bit of a game changer in terms of the ownership of these assets as far as that is concerned.
Yeah, it's interesting. I'd forgotten this, that Arcadium has 50% of Nemaska Lithium, which is working on a mining to lithium hydroxide processing project in Quebec. And then they also have assets in America. Could they run into pushback from the US government, for example? I mean, we know the Americans are very interested now in getting control of some strategic minerals.
Well, if we kind of go back and see Nippon Steel's acquisition of US Steel, it was supposed to be a very straightforward kind of an acquisition. But eventually we saw that that very deal was hamstrung by politics. And the fact that now we are just few weeks away from US elections, and as far as Arcadium is concerned, almost 35% of the workforce is in North America. So we believe that politics could end up being a bottleneck as far as this deal is concerned as well, primarily because if you look at Rio Tinto as well, Rio Tinto's largest shareholder is Chinese state-owned firm called Shalco. So that's again something that the governments of the Canada, US may want to kind of take into consideration.
That's an interesting...
It may not really be...
Sorry, go ahead. Go ahead.
So it may not really be looked upon as just an Anglo-Australian miner, but that's largely owned by a Chinese state-owned firm.
That's an interesting angle, okay, that there is a Chinese presence there. And that's an interesting point as well you made, that in the past we've often seen mining M&A crazes when the markets were hot, but lithium is not a hot market right now. Prices are down.
True. So, which is why I said that I think Rio has been very clear as far as its strategy is concerned. So even when BHP unveiled its takeover offer for Anglo American, Rio's CEO was very clear that they kind of feel that there's a lot of froth as far as copper valuation is concerned, and they may not really want to kind of chase such hot assets, which in a way has been a blessing in disguise, because the kind of unwinding that we saw in the copper markets after it peaked in May 2024, that has been a validation of the kind of caution that Rio CEO has been endorsing right from the outset. So in that sense, we feel that while it is understandable that M&A is being driven a lot by copper and related assets, from a counter-cyclical standpoint, it may hold a lot of merit to kind of look at beaten down metals like lithium and, for that matter, even nickel, because as we speak, these are two metals that are still very important in the manufacturing of batteries and various other green transition technologies. So from that standpoint, consolidation of ownership for these two metals is an inevitable outcome, we believe.
Thank you very much. Interesting stuff. And you gave us some fresh angles on the story. Varun, I really appreciate it. Varun Sikka.